All right, Steve, stay right there, because for more on Trump's visit and the future of the Fed, let's bring in Roger Ferguson. He's former vice chairman of the Federal Reserve. He's also a CNBC contributor. Roger, it's great to have you on. The significance of the video we just saw, that interaction between the president and the Fed chair, your takeaway.
Well, look, let's be very clear. It has very little to do with the building. That is the cudgel that's being used right now to try to do something I think is very unwise. The president is trying to pressure the Federal Reserve, including the chairman, to lower rates at a time when I think the data don't support that. What is unusual here is not that there's this pressure, because it has happened many times in the past. What is unusual is how public it is, and I think it risks really undercutting the independence of the Fed, or the perception of independence, and I think that is not very helpful at all.
So, Roger, a number of folks have, in recent days, made what you could call a contrarian case, whether it's Mohamed El-Arian or it's Jeremy Siegel, because of the politicization or the optics of politicization here, that perhaps if the goal here is to maintain operational autonomy for the Fed or the optics of independence, that the best thing the Fed chair could do right now is to resign. Your reaction?
I disagree with that completely. I think the worst thing that Chair Powell could do at this stage is resign, because it would obviously be a political move. It would obviously be in response to the pressure from the president. It would be the opposite of proving independence. I think the best thing that Chair Powell can do, and the best thing the FOMC can do when they meet next week, is to make decisions based on the incoming data, changing outlook as they see it, and articulate whatever the end-around rationale is. I would expect them to keep rates on hold and maintain a wait-and-see posture, because there's so much uncertainty. And to do anything other than that, I think, would be inappropriate at this stage.
Steve Liesman, give me your take on the significance of this moment in the history of the Fed and sort of what happens perhaps from here. The president has made the argument that the Fed is political. Some other people have said that as well. David Zervos has said that here on Overtime, and that the Fed isn't lowering interest rates perhaps for political reasons. But at the same time, what we just saw, the stagecraft with the hard hats and then, taking out the paper and saying the cost overruns are worse and that this is really about construction. But no, it's not. The Fed seems to be getting pulled into a political atmosphere, even as it tries to assert independence. Is it possible to get this rabbit back in the hat? Will the Fed ever be arguably completely independent again if it has to deal with this sort of political tug of war?
So there's something that I sort of like about Donald Trump, in the sense that the way he pushes every institution to the limit and to find out how strong it actually is. And we are at a moment now where we are going to find out just how strong, how secure, how independent the Federal Reserve is from political pressure. Not because the president made a couple tweets, not because that he took a Fed chair, as Roger said, as happened in the past, in the back room and yelled at him, but because he has created a public assault on the Federal Reserve and made a huge issue out of a building renovation. And we will find out, John, what is the deal? How independent is the Fed? I think if it survives this, it emerges very strong, and we'll see. I just want to make one comment on something the president said in front of the Fed chair. He said the economy is doing great, and he used the word hot. That's an inadvisable word, I would say, for the president to use to the Fed chair. You got a hot economy. I think that's a reason why the Fed may not be so interested in cutting rates. Look at jobless claims this morning, 217,000. The unemployment rate, 4.1%. We're going to do pretty good on GDP growth in the second quarter. I guess we get that next week. And other things are doing pretty well. The stock market hitting new records. And by the way, this whole big to-do about should the Fed cut rates. The Fed has 2 cuts dialed in, just not in July. And I should think that the economy is strong enough, the president would be even confident enough in the economy and the legislation that he has shepherded through to think that a Fed that cuts a quarter point in September is not that consequential versus doing it in July.
Okay, Roger Ferguson, last word to you. Given all that our Steve Liesman just said, this could come down to the Supreme Court. No, we've had some indication from the court that there are limits to a president's powers to fire and perhaps those limits begin at the Fed's door?
Look, the Supreme Court was pretty clear that, at least with respect to the Fed, the president's powers are maybe more limited than for other places. There's still this question of for cause. So while this may come down to the law, I think at the end of the day it comes down to markets, and it comes down to the points that Steve was making, which is, the current incoming data does not support the concept of a cut. The president should be relishing his strong economy, which does not call for a cut. And the final point is, if the Fed were to cut rates inappropriately now, it is going to make the cost of borrowing for the United States higher, not lower, as markets build in greater inflation expectations. So I think at the end of the day, the Supreme Court may have a statement in this, but the markets, I think, will dictate what needs to happen. And I have a high degree of confidence that Chairman Powell and his colleagues will stand firm, do what is right, and come out of this showing that they are prepared to serve the U.S. people and the economy and their mission, not knuckle under to political pressure that's being applied so publicly at this stage.